Okay folks, welcome back to the LiquidFX YouTube channel. Here we have the NASDAQ or the NQ time frame here in front of us. And we're going to be going over a case study of a particular sell trade, or one particular sell trade or price action review that you could have taken from last week. So this is the 30th of May 2024, so last week before June began. Okay, so from this chart right now, you want to look at yourself, you want to see where we're positioned in terms of our structure, our order flow, our dealing ranges and PD arrays and fair value gaps, right? So from here, what we see is we see bullish structure. So this is the first thing to identify as a trader of any sort, right? You want to identify where the structural highs and the structural lows are. So I've done this pre-recording of the video, right? So what we see is we see a structural high, structural low. Yes, we saw a structural high over here. There's minor structure over here, 4-hour structure, which I haven't marked on for simplicity. We see a retracement, at least 2 candles. Remember, sharp move up and sharp move down. And now we've seen another push up. So what we saw in the month of April going into May is we saw price give an all-time high over here, right? So our all-time high on NASDAQ was printed on the 23rd of May. So NASDAQ was bullish up until then. So here we have our all-time high, which I'm going to highlight in yellow. This is our all-time high of the market. Let's label that ATH all-time high. So when we have an all-time high, what's happened is, from a structural perspective, is that we've had a break of structure to the upside and we've broken the last previous high. So this is our last previous high over here. And when we break a previous high, we understand from basic or even intuitive concepts from SMC that when we break a high, we expect somewhat of a bearish retracement or somewhat of a retracement. And that's exactly what we're kind of seeing right now live in price, and that's the bread and butter of what this trade is essentially made of, right? So if I quickly bring your attention to the right of the screen, what we see over here is we see price, when price breaks the previous high, so we see a break structure, what we anticipate is somewhat of a correction before potential push up, right? So overall on NASDAQ, of course, it's bullish. People ask me, what's my narrative on NASDAQ, right? So when I see this chart right now, people ask me, LiquidFX, what do you think, right? What do you say with this chart? Well, yes, the structure is bullish, right? The next thing we want to look at is our PD arrays, right? Our PD arrays, which come from our dealing, right? So what we have over here is we have a bullish dealing range to work, right? From this swing low down here up to this swing high up here. So this is a bullish dealing range, and we have, of course, a premium up discount down here. And the last thing we look at is the fair value gaps. Where are the inefficiencies? Where are the imbalances in price, right? So if I quickly zoom in into this discounted daily POI, again, what we see over here is we see an imbalance or a fair value gap, which I'm going to label over here. So this is a bullish fair value gap. And of course, it's a bullish fair value gap that's priced in the discount itself, okay? And that's very important to understand. So for those who are asking me what the overall narrative on the NASDAQ is, it's something like this. So what we could see is we could see a retracement down into at least the equilibrium level, but ideally into this POI, this discounted daily POI, before potentially heading higher. So this is the overall NAV on the NASDAQ, right? On NQ futures or NASDAQ or US tech, you know, they're all kind of the same thing, really, price action wise. So if we head down now to the 4-hour time frame, the 4-hour time frame, again, there's only a couple of things we want to dissect on the 4-hour time frame, right? So this is the most recent price action on the 4-hour time frame. And what are you looking for specifically on the 4-hour time frame? We understand that we're at an all-time high region over here. So when we see a daily retracement, what we're looking for is a 4-hour change of character, right? We're looking for a 4-hour chalk. Famous phrase in SMC ICT realms. The 4-hour chalk itself is positioned just over here. So this is the 4-hour chalk itself. Let's label that as chalk. So what makes a chalk? Well, it's quite simple. It's literally just another way of saying there's an internal structure break. Okay, this is an internal structure break just over here. So now that we see the 4-hour chalk, another thing that's worth noting is that we had a 4-hour fair value gap, or a 4-hour inefficiency just over here. So this was our 4-hour inefficiency over here. Notice how price has come in, has mitigated that candle, filled in the imbalance, and then has started its overall retracement downwards, right? So from here, you want to ask yourself, you don't want to force any trades, right? So you don't want to force the markets to come down to that daily POI over here. But what we have seen, what we did see last week is a 4-hour change of character. And a 4-hour change of character is a very, very powerful realization or a very, very powerful price action technique you can use to determine a potential retracement in the markets, right? So now we're going to dissect a 15-minute potential trade, right? Potential price action, review, potential trade that you could have taken based off the price action from Thursday, the 30th of May, 2024, right? So this is a trade I didn't take. I don't personally trade NASDAQ, but I've had some questions on the NASDAQ recently, and it's quite a popular market, so I thought I'll give people an insight. Okay, so what we have over here is we have our Thursdays opening, we have our Thursday, one day before the end of the week. And I'm going to label a few things on the chart just so people have an intrinsic understanding as to how we trade, right? ICT concepts. What we have over here is we have the Asian session range. So the Asian session range ends at 5 a.m. UK time, which corresponds to midnight New York time. So that corresponds with the IPTA reset price, right? The IPTA resets at New York midnight, right? And that's what we refer to as the opening price, the New York. So what we see over here is if we draw a line, a red line just over here, so let's label this red. This here represents our daily opening price, right? This is our daily opening price. This is the IPTA reset, okay? Let's label that IPTA reset, right? This is at New York midnight opening price, right? This is the New York midnight opening price. So wherever you are around the world, it's important to calibrate this time to wherever you are around the world, right? So what we have over here is we have the Asian session range, okay? We have the Asian session range. Now, the Asian session range has one key purpose, and it's to build liquidity. And the liquidity comes in two forms. We have the Asian high, so let's call this the ARH, Asian range high. This is buy side liquidity, or BSL for short. And what we have underneath, as you can probably guess, is we have the Asian range low, ARL. This is the sell side liquidity, or SSL, right? So we have buy side and sell side liquidity. Now, why is this important to us as traders and as analysts? So as we now come down and we go into the Frankfurt and the London session, what we see is we see the London session sweeping below that daily opening price, and we see it sweep the Asian range low. We use the Asian range low as a kind of like a guide, or kind of like a basic map of where we expect structure to be, where we expect certain structural lows and highs to be relative to time and liquidity. So that sounds complex. Let's break that down. When we see a sweep of the Asian range low, just over here, this is a sweep of the Asian range low. Now, the Asian range low itself doesn't really do much because it's just a sell side liquidity point. But this move here is crucial. This London move over here at 7:45, 8 a.m. UK time, so that's about 3 o'clock in the morning New York time. This is very, very important to understand why this is happening, right? So this here happens for a very specific reason. This here is an enticement, or it's a trap of early sellers, right? Let's label that trap of early sellers, right? So why does the market look to trap early sellers, right? So when we see a sweep of the Asian range low, what the market is enticing people to do is it's enticing people to sell upon the first impulsive move opening of the market, right? So when we see a sweep of the Asian range low, it's a trap and it's an enticement, a manipulation of early sellers, right? We often call this at Liquid FX the manipulation phase one. Manipulation phase one. And the reason why we call it manipulation phase one is because there's no surprises in manipulation phase two as well. But this is known as manipulation phase one. And the purpose of this is to entice early sellers into the markets, right? Now, after we've done that, what happens is in the London and New York session, we rally up, right? We rally up and price gives us structure to work with, right? Internal structure, right? Again, you can mark this up on the 5-minute, but I'm going to stick to the 15-minute time frame just because of just simplicity of the video. What we see over here is we saw price break structure to the downside, right? Notice how we want 2 candles for a pullback, right? So what we see is we saw a structural high, structural low, and then price produce a structural high before breaking structure over here. So before we dive into the actual structure break and determining where to enter, let's look at the manipulation phase 2, right? A lot of people refer to this as the Judas swing or the turtle soup or simply manipulation. All of those are correct. But you want to ask yourself, what does this move over here actually achieve from a market point of view, from an emotional point of view? Yes, we're above the Asian range high. We've swept buy-side liquidity, right? So you want to ask yourself, what's happened to the early sellers? Well, they've been enticed out of the market through this Judas swing move over here. So when we see price sweep the Asian low and then the Asian high, this here is a Judas swing or the high of the day. Now, a quick tip you want to understand as ICT traders, right? The Judas swing will occur often above the Asian range low, and it typically marks out the high of the day, right? HOTD, right? High of the day typically occurs above the Asian range high after it's swept buy-side liquidity, okay? And now what we have over here is we have a clear shift of market structure, MSS, shift of market structure. So now that we've achieved that, you want to ask yourself, just like we've done on the higher time frame, right? Now from here, we have a new structural dealing range to work with, right? We have a new structural dealing range to work with, right? So remember the 4 pillars that I've spoken about on the higher time frames? They apply on the entry time frames, on the lower time frames. So what we have over here is we have market structure, right? So let's quickly look at our market structure. Market structure over here is indeed bearish, right? Notice how we had structural high, structural low, structural high, and now we've had a break of structure. So this now becomes our dealing range. Okay, so let's quickly mark out the dealing range. This here is an ICT dealing range, or you can just call it a dealing range for short. The next thing after structure is to identify the dealing range. And what does the dealing range signify? What does the dealing range tell us, right? What does it signify? Well, the dealing range signifies the most recent high and low. So we have the most recent high. A lot of the time it will be the Judas swing. And we have the low that the market structure shift produced, right? So we have the structural high and the structural low. The next thing after we've identified both the structural high and the low, which is the dealing range. The next thing we look at is our premium and discount arrays, our PD arrays, right? Very, very important to understand our overall PD arrays. So let's label that correctly as number 3. Now, what does the PD arrays tell us? So what we do is we project the Fibonacci tool from that swing high down to that swing low, right? Notice how I'm doing this. Swing high, down to that swing low, just like this, okay? So once we have that in place, right, we understand that price is going to come at least to the equilibrium, if not higher. In this case, it crept higher, okay? And once we've identified our PD arrays, the next thing we want to look at is our fair value gaps. And this is where the magic really begins, right? Because once you've identified a fair value gap, it's important to then classify that fair value gap into a specific time, which I'm going to get into now. And after you've identified the fair value gap, you're pretty much good to go because we've identified a manipulation and we're now looking to identify and trade off the distribution after, of course, an accumulation, right? So accumulation, manipulation, and now we're looking for the distribution. So let's see how you could have got involved in the distribution, okay? So from here, we understand, yes, we are in the premium, so we are above that 50% level. Here is our fair value gap over here, right? So there's 2 things with the fair value gap that it must be, right? The first thing with the fair value gap is that it must be in line with a higher time frame narrative. That's very important. Now, from the start of the video, we understood that we're above a daily all-time high, and we expect somewhat of a correction, a bullish correction. Therefore, we expect bearish pricing. So that's the first thing. Fair value gaps are only as good as the higher time frame narrative or the higher time frame backing. If you don't have a high time frame narrative, none of your fair value gaps are going to mean anything. You're going to take losses after losses after losses. So you want to avoid that by simply keying off the correct fair value gap. And the next thing you want to do, which is very important for ICT concepts, is you want to make sure you're keying off a fair value gap in a specific time window. So you might have heard me referring to these as time-based FVGs, right? Or time-based fair value gaps, right? So a time-based fair value gap simply means you want to be trading during that New York session, right? So the New York session is 9:30 to 11:30 a.m. Eastern Standard Time, right? So wherever you are around the world, you want to calibrate your charts and your overall analysis and your fair value gaps and structure breaks and Judas swings and everything else. You want to calibrate it towards this sort of timing, right? You want to look for your fair value gaps definitely in this timing between 9:30 to 11:30 Eastern. A lot of the time it's 9:30 to 11, right? So only the first 2 hours of market open. And this applies on the NASDAQ, on the S&P 500, a lot of Forex pairs, even US 30, Dow Jones, a lot of it applies, right? So you need to understand how you can essentially trade off a fair value gap. And one of the key things to identify is the time in which the fair value gap occurred. So let's look very specifically on this day. This fair value gap itself occurred right in the middle, right towards the middle. So this was at 10:30 a.m. Eastern Standard Time. So it's definitely within that 9:30 to 11:30, bang on in the middle, right? So from here, how do you catch the potential distribution? So your job is to understand that, yes, we have a fair value gap over here. So we are correctly selling from this region. I would personally want to be selling from the equilibrium itself, because we understand price is going to reach a discount at some point. Sorry, a premium. So what you want to do is a safe entry will be over here. A safe stop loss. I typically have my stop losses just above the Judah swings. You can have them around this level. Yes, you can have them a little bit lower down as well, because we haven't got any inefficiencies over here. So price, it's less likely for price to come up to these regions over here. So once you have a safe stop loss itself, from here it's important to understand that where do you now want to target, right? Where do you target? Well, typically I target 1 to 2s more often than not, 1 to 2s, 1 to 3s. But again, this trade did have the potential to run. It ran until Friday pretty well. So you can see the overall narrative here playing out. And that's the most important thing. Not necessarily the R multiple, although the R multiple is very important. It's understanding how the trade fits into a higher time frame narrative or a higher time frame bias. And that's the most important thing to understand, right? And now, one thing at the start I mentioned, right, for those who are paying attention, one thing at the start I mentioned was the interbank price delivery algorithm reset time, right? Notice how we're selling above the daily opening. This is a quick tip as well. You want to understand, ICT traders out there, SMC traders, you want to sell above the interbank price delivery opening price. You want to sell above the daily open, and hence if we're in a bullish scenario, you want to buy below the daily open. So that's another quick tip that you can integrate to your overall analysis. But if you can understand the 4 pillars and tie it in with an entry model and understand where the higher time frames are likely to go, that is essentially your golden ticket towards trading as a whole, right? So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.